So Life in the Morning session is another renewable energy company with a bit of a focus on power storage as well. It's Genex Power, and we're lucky to have Executive Director Simon Kiston from Genex to present to us today. So with that little introduction, Simon, I'll turn it over to you. Share your screen. I think you're free to talk.
Okay, so Craig, can you see the screen in front of you?
We can. We can just see the little notes pane on the right-hand side. So maybe if you can go to full screen version, if you can, that would be good.
Yeah. Look, not off the bat, but I might just kick off anyway, Craig. So thank you so much for including Genex in your session this morning. Our business model is very much focused on producing strong and stable returns for our shareholders. And we want to do that in a very sustainable, environmentally friendly way. So our business model is focused on renewable energy generation and energy storage. And we're converting what was once a very large gold mine into a renewable energy hub. And in that main photograph, you can see in front of you, we've got the former gold mining pits, which have been converted into pump storage hydro. And just behind that, our operating solar farm, which is producing electricity as we speak. Okay, so in terms of the business, we are very well capitalised. We've raised money to fund the construction of our projects. And you can see we're focused on two areas. In Queensland, our flagship project is the Renewable Energy Hub, which we're developing in stages. And in New South Wales, we are now in construction for a solar farm, a 50 megawatt solar farm near the town of Forbes. So this is really a very significant portfolio of renewable energy projects, which are generating strong cash flow and have the potential to deliver substantial step up in earnings over the following couple of years. One point worth taking away on this slide is that the board and management team are significant shareholders in the business. And I believe that's important because that gives a very strong alignment of interest between all shareholders, including board and management, and every single shareholder in the company are strongly aligned. So the portfolio, the first stage Kidston Stage 1 solar farm was developed and started production in 2017, and it's been producing strong sustainable cash flows since that date. The important point with this project is that it's underpinned by a long-term contract with the Queensland Government, which guarantees $13 million of revenue per annum. And that really provides a very solid cash flow footing to the business, which supports the growth of the portfolio, which I'll explain in a moment. The contract with the Queensland Government extends to July 2038. So there's some 18 years left to run that contract, which really does provide a high level of cash flow certainty for the business. Our second project is the Gemelong Solar Farm. That project commenced construction earlier this year, and we're aiming to bring that project online and deliver first revenues by December of this year. And that is a truly significant milestone for us because when that is achieved, we believe that has the potential to double our revenues by around December of this year. So clearly a big step up in earnings for the business, which will, I guess, drive the growth that much further. And we don't believe at this stage there's any COVID impact in terms of the construction schedule. We've got workers on the site now. They're busy delivering that project with a December finish date for first revenue. The K2 hydro slide, the third line there is our flagship project. This is our pump storage hydro project. We think of this as a giant water battery. I'll explain what it is in a moment, but that project is now shovel ready. And our intention is to complete the financing in the next couple of months to enable us to commence construction in the third quarter of this year. So that will be a major milestone for the business, and I believe the potential for the company to be significantly re-rated by the market as we lock in those revenues from what is a very long life infrastructure asset. Beyond that, we do have a portfolio of additional solar and wind. Those projects do add strong growth to the business, but we'll get to those once we've completed the financing of the hydro project and got the construction of that project underway. In terms of clean energy credentials, it is a very key focus for the business, and the way we benchmark ourselves is in the form of CO2 abatement, which is effectively the amount of CO2 saved by the generation of clean electricity compared to the generation of other forms of electricity. So if we look at our operating asset, the Stage 1 Kidston Solar Farm, 50 megawatts, that has the impact of abating 120,000 tonnes of CO2 per annum, which is a very significant amount actually. That's around the equivalent of what 26,000 households would emit. So quite a significant solar farm. But we've now, I guess, locked in substantial growth to that CO2 abatement. And we'll do that by bringing on the Geelong Solar Farm later this year. That will effectively double our abatement to around 226,000 tonnes of CO2. And that will step change again in 2024 when our pump storage hydro project comes online. So by that point in 2024, we expect just under 2 million tonnes of CO2 to be abated or saved by going to the environment by the operation of these plants. So it's, I guess, whilst the focus of the business is generating strong, stable cash flows for our shareholders, we're doing so in a way which is environmentally sustainable and does leverage the business towards this long-term trend of a decarbonising economy. So I'll explain a little bit about pump storage hydro. You can see the two former gold mining pits in front of you. Essentially, this is a very mature technology. Pump storage hydro has been around for more than 100 years. There's several hundred of these plants operating around the world today, with 3 operating in Australia. The Snowy 2.0 is operating. It's undergoing an expansion at the moment. There's also one near Sydney in the Kangaroo Valley, and there's one just outside of Brisbane called Wivenhoe. And what's driving an emergence or focus on energy storage and pump storage in particular is the transition underway in the energy markets. And that's fueled by the growth of renewable energy, which produces energy when the wind shines. So when the sun shines, the wind blows, but can't be stored unless it's done through some sort of battery, whether it's pump storage hydro or a chemical battery. Our technology, being pump storage, is a very low cost, mature technology, and it's simply nothing more than 2 reservoirs, one high reservoir, one low reservoir. When energy prices are high and demand for energy is high, water is released from the upper reservoir through tunnels and turbines to generate power into the low reservoir. And when, I guess, the market's an oversupply and prices are very low, water is pumped from the lower reservoir back up to the upper reservoir, thereby completing the circle. So it's a very simple technology, and our project, being shovel ready, is ready to kick off in terms of delivering that. So in terms of hydro pump storage, scale is key. The bigger the better. And I guess in this slide you see here a comparison about the depth of our pits relative to some well-known landmarks. So for those familiar with Sydney Tower, the depth of our pits at 300 metres is greater than the Sydney Tower, and I guess most other buildings in major centres in this country. In terms of water flow, huge amounts of water flows from the upper reservoir through these turbines to deliver power. And I guess the metric there is that we can fill one Olympic-sized swimming pool with water every 15 seconds. So just imagine the force of water flowing through these tunnels down 300 metres to generate power through these turbines. It creates a very, very efficient machine. So this site, being once a gold mine, really was a gift in that we had a lot of this infrastructure lying around surplus, which was acquired at very, very low cost, which enabled this project to be developed in a very efficient manner. The big milestone we announced about 6 weeks ago was a partnership arrangement with Energy Australia. You may be aware that Energy Australia is a very large energy retailer, and we've signed an arrangement which will see us partner with them to develop and operate this project over the next 30 years. So under this arrangement, Energy Australia will be the operator of the plant. They will generate the power when power is required. They'll pump the water from the low reservoir to the upper reservoir to recharge the battery when it's required. So we're partnering with them for their expertise, and they will be taking all the risks associated with energy prices, energy volumes, and transmission loss factors. And Energy Australia, in return, will pay us as owners of the asset a fixed and known long-term rental arrangement over the next 30 years. So we see this as a very key arrangement. It underpins the financing of this project and enables us to secure our debt arrangements, which are now being finalised with the Northern Australia Infrastructure Facility. So this project is shovel ready. We've locked in the revenues now for up to 30 years, and we're doing so in partnership with one of the major energy retailers in Australia. And we expect this project to be generating for the next 80 years. In terms of our Gemelong project, I'll just make a few comments about that, given it is a very active work stream at the moment. The site of Gemelong is in New South Wales. It's located near the town of Forbes, which is near Parkes in central New South Wales. Very, very good solar resource. And that project commenced construction earlier this year and is on track to deliver first energy into the grid by December of this year. We've got a very experienced contractor building that project for us. Beon will deliver it for us. They've got good expertise and are doing so under a fixed price contract. So if there is any delays or cost overruns, that will be for the account of our EPC contractor Beon, and Genex will be shielded to a large extent from those losses should they arrive. But at this stage, the project is on track to deliver revenue without any delay anticipated at this stage. Just a few comments about our operating solar farm in North Queensland. This is the stage 1 of the renewable energy hub up at Kidston in North Queensland. This project, as I mentioned earlier, commenced generation in December 2017, and since that time has been delivering very, very stable cash flows to the business, underpinned by that long-term contract with the Queensland Government. So revenue generated since inception is just a little bit over $26 million, and we expect that cash flow stability to continue for many years to come. One point to note, of course, with North Queensland is there is a phenomenal solar resource. In fact, this project has the highest solar resource of any solar farm in Australia without exception, and that, of course, drives one of the key factors to do with the efficiency of the solar farm. In terms of our pipeline project, really this leverages, I guess, the unique site we have up in North Queensland. I mentioned the phenomenal solar resource, but it also has a very, very good wind resource. And we have now secured sites near our main mode of operation, near the gold mine, where we're doing a wind assessment to test the feasibility of adding wind farms into that region, which would really, we believe, create the holy grail of renewables, and that is the integration of wind, solar with pump storage. So I guess what I mean by that is that wind would blow when the turbines would spin when the wind blows for the wind farm. Obviously, during the daytime hours, the solar farm will generate power, and during periods of intermittency or gaps in generation when the wind is not blowing or the sun is not shining, the pump storage hydro can operate at short notice to provide effectively baseload renewable energy for the state of Queensland. So to conclude, really I think our business model is all about delivering projects that have the potential to deliver long-term stable cash flows to our shareholders. Our first asset, KS1, is up and running. That certainly fulfills that objective of long-term stable cash flows backed by very, very credible offtake arrangements, in that case, the Queensland Government. Our flagship project being K2 Hydro is on track to commence construction by Q3 this year. We believe that will be a major catalyst in the way the market looks at our company. It really is a step change in our revenues. And we believe the milestones to be announced between now and financial close and first solid turn will be potentially very significant for this business. But in the shorter term, we've got the ongoing work associated with the construction of the Geelong solar farm. Again, that has the potential to double our revenues by December of this year. And in terms of a corporate wrap-up, the business has the management and the funding in place to execute on this growth strategy. So happy to take some questions if there are any. Craig?
Fantastic. Thank you, Simon. Yeah, we've got a range of questions coming in. I'll kick it off. There's a few just questions around what's next beyond the pumped hydro project. Any chance that you would move into other forms of energy storage, whether it be sort of gas, hydrogen, or other battery technologies?
Our business model is technology agnostic. So when we look at generation, as long as it's renewable, we'll certainly see that as a key part of our business focus. And the same applies to energy storage. So whether that's energy storage by way of pump storage or by some chemical battery solution, we're very much open to those opportunities. I guess we see pump storage as being large scale and low cost, but we see that complementing nicely, we believe, with batteries, which can be modular in nation and can be located in locations that are close to customers. So we see our business model, I guess, looking at both batteries, pump storage, wind and solar, as once we've completed the funding of our hydro project and have got the Geelong project connected to the grid, generating those cash flows.
Yeah. There's a question around the financial model at the hydro project. So you mentioned that there's no exposure to energy pricing. So is that a rental model that you're going to be generating from that project? And then what's the views in terms of capital that will come in from that project? Where will the company spend? Is it more about growth? Is it about dividend return? So any views on the cash distribution further down the stream?
I think the characteristics of critical infrastructure such as pump storage hydro means there's a very long economic life. And we've now attached to that a long-term revenue contract with one of the major energy retailers in this country. So we see our business model as, once these assets are generating and connected to the grid, producing dividends to our shareholders. We'll do that once the hydro pump storage project has been generating sustainably into the grid. But we see the revenue contracts by tier one counterparties as being very appropriate to pay out the majority of free cash flow to shareholders in the form of dividends when they are operating and generating.
Perfect. Just a question around one of your partners, J Power. What sort of technical expertise are they bringing into the project? Someone highlighted the fact that they do have a range of pump hydro projects around the world. Are they a technical part or an equity partner? Where do they sit in the project?
So J Power have announced with us a term sheet which will see them subscribe for 20% of Genex Power at financial close for the pump storage hydro. And we see the partnership with J Power being significant for two reasons. Secondly, it provides the equity we need to deliver this hydro pump storage project. But importantly, J Power have significant expertise in pump storage hydro. So J Power is, I guess, short for Japan Power. They are the largest pump storage and one of the largest generators in Japan, but also globally. And we see the potential for us to leverage that expertise to deliver the construction of these projects. And in fact, they will be delivering an executive to our management team, to someone that's built projects like this around the world. And one of their directors will join our board to make sure that this project does get built on time and on budget.
Great, thanks, Owen. Just for the essence of time, I think we've got one last question that we'll put up to you. Are you able to say what the key hurdles are to finalising K2? Is it more on the financial side, or is it around the design engineering side of the equation?
Look, we see we're on a clear pathway now to reach financial close. The key catalyst in March was the announcement of the partnership with Energy Australia. So having now done that, we have some work streams which are very, very well advanced, and that is essentially finalising the debt arrangements with the Northern Australia Infrastructure Facility. They'll be providing the vast majority of the funding required to deliver that project. It's very low cost concessional funding from the federal government through Northern Australia Infrastructure Facility. There's potential for funding from ARENA, which is another federal government body, which we're very, very close to. And we're also running in parallel to that a joint venture process whereby we will introduce a partner to co-own the hydro pump storage with us. And the expectation there is that that party will provide the bulk of the equity required to develop this project. So in doing so, Genex Power will retain a significant interest in the project, but will do so in a way which doesn't unduly dilute our shareholders.
Fantastic. Thank you, Simon, and appreciate the time that you have given us this afternoon. With that, I'll just quickly turn back to Ron to sum up today and talk you through the three presenters that we've got in our afternoon session today. Thanks, Ron.
Yeah, thanks, Craig, and importantly, thank you, Simon, for closing out session one this morning of our Riding the Wave of Environmental Change Conference. We're delighted to have everybody, all the four presenters present this morning and everyone dialing in. For those that haven't registered yet, 2 o'clock today, we have the CEOs of Syrah, SciDev and Carbon XT presenting over that hour or so. So it should be an interesting afternoon. Once again, thank you very much to the presenters. If any of the people that have participated have any questions, would like any follow-up meetings with the CEOs that have presented today, CEOs and founders, please let us know. We're only happy to facilitate any answers or access to them. So thank you all very much. Have a good lunch, and we look forward to seeing some of you back here at 2 o'clock for our afternoon session. Thank you very much. Bye.
Thanks very much.